you already understand ICT concepts like fair value gaps, market structure shift, and silver bullet and stuff like that. But you keep losing money. It's very simple. I'm gonna show you 4 reasons why ICT and SMC concept traders lose money. So let's get right into the video. So first thing you don't understand is time. You need to understand macros and kill zones. So write these times down or go on TradingView and indicators and you can find this. But you need to remember this or at least see it on your chart, because these times are the times when you want to use the ICT concepts. I'm going to show you a couple of examples of this, of the macros. And also kill zones are very important too, because that's when there is liquidity in the market, and that means that the algo and institutions, they want to move the price to take out the liquidity. So that's why it's important to know these kill zones, and it's different for futures and forex. So look at this. I am going to be making a bootcamp in a week where you will learn everything I know. And look, you don't have to join. Like, every info you need to make money is free on my YouTube channel. But this bootcamp is for those that want to basically learn faster and get a guidance from me. You will also be able to message me and it will be live. So if you're interested, you can join and see you in there. And also this helps you with better focus, because you can just go to the chart for an hour in your kill zone, and for your macro that you like, I like the 950 to 1010 macro in the morning kill zone. So I am always in front of my screens at these times, always. Anything else is just not as important to me. So let me show you a couple examples of the macros. So I'm using this ICT macro indicator because I don't like remembering all of the times, and in the beginning it helps you a lot. So what you want to expect in macro to happen is for the price to come into an imbalance or to reach liquidity, or both. So we can see that the macro starts here and we go into this imbalance right here. In this macro, you see that? There is a theory that macros are basically, there are 3 types of them: accumulation, manipulation, and distribution. And that means that you can either see the macro be just chopping the price, and that's all that's happening because the institutions are accumulating their position, or you can see manipulation happen in macro and distribution also in the macro. So that's why it's important. Second, you don't understand liquidity. You need to understand that if you're looking for a reversal, you must reach some point of interest, which is usually liquidity. You cannot just look at the chart for any fair value gap or any market structure shift or something like that if you don't know where the liquidity is and where the draw on liquidity is. So learn that. Third thing is you are trying to trade too many concepts at once. Just learn one, or not one concept, but learn one model, one strategy that you will use always. And you will use it for at least a couple months, if not years. Because then, if you master that one model, it will be so easy for you to master any other one. But let me tell you something. You will not want to master any other one, because you will know that your model works and you're making money and there is no reason to trade more. So master one model only. Stop trying to trade Judas swings and market structure shifts and turtle soup and everything at once. Just master one and trade that. And last but not least, point of interest. You do not understand point of interest. And that can be literally anything. That can be order block, fair value gap, liquidity, anything. So guys, remember that time is very important with ICT concepts. Liquidity is very important. Trading only one model is also important, and knowing where your point of interest is, and that's the fair value gap or order block. So let me just show you like quickly. This fair value gap right here above this liquidity is your point of interest. In this fair value gap, you would be looking to go for a reversal. So let's see if anything gave us the reversal. You can see that we got a market structure shift here. So you could be looking for a reversal here. And it would fail, right? But it's okay. Because you cannot be right all the time, and today is NFP. So, you know, markets don't behave. But then again, we can see the price ran above this fair value gap, which was our point of interest, and it held the price here and also here. So that's why you need to know where the point of interest is. And that's just higher time frame liquidity, or not liquidity, but like fair value gaps, order blocks, and anything like that. Any inefficiency is your point of interest. Remember that. So thank you guys for watching, and see you in the next video.